Hello, everybody, and welcome to Investing with IBD podcast sponsored by Scoofus. It's Justin Nielsen here, and it's Wednesday, May 18th, 2022. And joining me, as always, I have Arusha Pires, portfolio manager over at O'Neill Global Advisors. Welcome, Arusha.
Hey, Justin, thanks for having me on again.
Oh, well, I mean, it's not like I'm having
That'd
you
be
on. You
nice.
force
Yeah.
yourself on. It's, basically, no
Tomato,
one can get
tomato.
rid of you. Right? But we're also glad to welcome back onto the show. This is someone that Arusha, when he was a captain of this ship, someone that he interviewed, what was it, 2 years ago? It's Andrew Chanin. He's the CEO of ProcureAM. So, Andrew, welcome back to the show. Thanks for being here.
Thanks for having me. Thrilled to be here.
Okay, so Andrew, let's go ahead and start out. ProcureAM. That doesn't really tell me anything about what you do. What is it that you do? Who are you?
So I started off my career making markets in ETFs, and from there, actually developing ETFs and creating products that I thought that investors were looking to get exposure to. And over at ProcureAM, we've built a pretty diversified company where right now one of our big focuses is the space industry. And knowing that this was an industry that a lot of people are interested in, but don't necessarily know how to pick these securities, we wanted to create an easy, diversified way for people to get instant access to over 40 publicly traded companies from around the world, specializing in various areas of the space economy.
Okay, and why space? What was it? I mean, certainly there are. Were you a big Star Wars fan? What got you so interested in space, or was it just recognizing this kind of final frontier, if you will?
It's a mix of all these things. I've had a knack for bringing out products, sponsoring, developing products before many people are considering investing in them as a theme. I helped bring investing into cybersecurity to the U.S., video game technology, numerous other areas before other competing products were created around those areas. And space was one of those that, I was certainly interested in the industry, certainly, television and, the whimsical parts about space as well, looking way off into the future. But really, there are some incredible technological changes, the ways that policymakers even look at space today. There were just so many potential catalysts out there for the overall industry that we thought that now was the appropriate time to create this product and give easy access to the space industry for investors of all types.
Hey, Andrew. Yeah, great having you back on the show. Talk about before we get too far into the space part. Talk about just understanding the index and why what are kind of the most important things to do when building the index to target what you're actually claiming that you're going after.
Yeah. So, to me, being first to market is important, but not at the expense of rushing out an index and really kind of thinking about what that index is, how it ticks, because ultimately when an investor is investing in a passive ETF, those ETFs try to replicate that underlying index. And so, there's been numerous examples over time where there'll be some type of themed fund, and you look at the holdings and all of a sudden you're saying, this is just another technology fund. I already own so many of these companies in my portfolio. Am I really kind of just Texas hedging my portfolio by adding this to the mix? And, examples like, having a water fund and GE being the largest holding because it's the largest company in the basket, but it's really, call it a less than 1%, revenue exposure that company actually has to water. So it's not really what's actually driving that company's performance. And space was something that I think is highly misunderstood or debated as far as what space is from individual to individual. But we were actually really excited when looking at this index that was available for licensing. It was co-developed by a former director of the Space Foundation, former director of research for the Space Foundation. He actually helped, if you're familiar with the Space Report, which is probably the most viewed annual space analysis report that comes out every year out of the Space Foundation. This individual, Micah Walter Range, actually helped develop the model years ago for quantifying what is the space industry, what are the technologies, what are the companies, what are the revenues, how has that changed over time, and measuring that. And so we have some invaluable expertise that helped build this index from someone that studied astrophysics and space policy while at school. and truly understands the space industry and actually dove in to do the research to determine revenues derived from space. So that is, a driving factor. At least 80% of the underlying index needs to have a majority of its revenues from space at times of rebalance. But it still leaves up to 20% for some of those more diversified players. So think your Airbus, your Raytheon, your Lockheeds that are major players in space, but it's not the majority of the revenue. So in order for them to qualify, they still have to have either over 500 million in annual revenues from space, or still be over 20% of their revenues, but less than 50%, but not wanting to overweight it with companies that are really moving for other reasons not associated with space. That was the reason for this 80-20 split.
Yeah, that's really interesting. So do you weight those, that 20%, do you weight those companies different if they don't have the majority of their revenues coming from space?
Yeah, they have a capped weighting at rebalance time. So, certainly once that rebalance day occurs, then the stocks in the fund are moving however they move throughout that next quarter. But at the next rebalance, those can be reconsidered to put them back into place. But it's not a firm rule that we have 20% of these diversified names. It's just up to 20% can be in them.
Mm-hmm.
Now, Russia, the whole war in Ukraine, with Russia and Ukraine. Now that's somehow space has something to do with this war too, or it's accelerating the business.
Space will likely have something to do with every war going forward for humanity.
Wow.
Space has become so interwoven into what we are as a society, but extremely importantly, from a military and tactical standpoint. So if you remember from the early days leading up to the Russian invasion of Ukraine, we were actually being provided with satellite imagery of troop buildup and equipment buildup on the border of Ukraine. Many of those photos were courtesy of Maxar, a major manufacturer and operator of satellites, and one of the top 10 holdings currently in UFO. So before the war even started, satellites were playing a major role in tracking this. And it's not just satellites pointed at the Ukrainian border. There are satellites all around the world looking at all different types of things, not always for military purposes. But that was really space's foray or entrance into this crisis. As time's gone on, communications was kind of the next big area from space. So you had Viasat, a satellite company, some of their satellites became inoperable, and it hasn't been fully attributed to anyone, but some people suspect that it was from adversarial nations trying to block off satellite communications during this time. So it was also brought to everyone's attention that President Zelensky was utilizing a satellite phone, as a way to have secure encrypted communications without being interrupted. And so that is just one aspect of how space affects war, but that was kind of the immediate steps.
Well, even with Starlink, right? With
Elon that's Musk. What I was thinking.
Yeah, he that went all viral, where he kept sending all the dishes and stuff like that to Ukraine so they could stay in touch.
Yep, and that's providing a valuable service to government officials, civilians. Many people have said maybe this is just a PR stunt for Starlink, but certainly people were benefiting from having those communications, whereas otherwise they may have been completely isolated. But when you look at the broader effects and looking at this crisis in particular, you have this isolation kind of movement, and Russia is saying, we don't want to cooperate with unfriendly or adversarial nations or companies that operate there. And space is something that had been previously pretty collaborative. I mean, you look at the International Space Station as one of the best examples of collaboration, regardless of what was going down here on Earth. There's collaboration there of numerous countries and astronauts from all over. And one of the first things they said was talking about stepping out of the ISS. Well, that's going to be decommissioned probably by 2030 anyways. And Russia had already said that they were going to be withdrawing maybe around 2025. This might speed it up. But when you also look at what Russia does, they were a major launch provider for even NASA for some time. And they essentially held numerous OneWeb satellites hostage for a number of days. making demands for the company and the UK in order to be able to use the satellites. And it started making companies, countries, military say, you know what, I don't know if I can do work with Russia. And so rocket engines from Russia are being cut off. So now you need to create your own rocket engines or parts, and certainly for launch. And that's actually created some tremendous opportunities for non-Russian commercial space players. And so European, North American, and other countries or companies looking to do business are starting to say, Russia's not even an option. Who can we use? And fortunately, UFO has many companies that governments are considering contracting with going forward, now that Russia is a little bit more of an unknown.
Mm-hmm. So it sounds like, and maybe you could break this down a little bit for us, because you certainly started with the satellites. I mean, and that's kind of a clear-cut case. I mean, look, there are all these things in space that we know are there. The satellites, orbiting, and then there, of course, there's the launch part, which is mostly at this point kind of transportation, either of those satellites to space or back and forth to the ISS. What other elements of there is there for space revenue, I guess?
Yeah, so the one that's gotten the most attention, but it's a much smaller part of the market than most people realize, is space tourism. Still in its infancy. Last year was really kind of the year of space tourism as far as familiarizing the public with what they're trying to do. Its takeoff has been a little bit slow from its pretty fast-paced 2021. That said, it's only predicted to be a $3 to $4 billion industry, according to many analysts, by the end of this decade. That would be less than 1% of the overall current space economy today. So, that's a small part that tends to get, the lion's share of the coverage. But there are a lot of things that satellites are helping do, providing real-time data, which we analyze for a multitude of purposes. You think of climate change, and right. Some people say space is dirty. There's a lot of emissions with sending rockets. Well, a lot of these rockets happen to send satellites that help us understand weather patterns, tracking wildfires or tornadoes, tracking emissions. So much of what satellites in space do actually help us understand climate change. So they provide a very vital role there. If you look at analyst predictions for the space economy, Bank of America Merrill Lynch had said that they believe that by 2045, this could be a $2.7 trillion industry. Wow. Morgan Stanley had said by 2040, they believe that this could be north of $1 trillion industry. The one thing in common with many of these estimates is that broadband internet will be driving at least 50% of that growth. And satellites are basically providing this broadband internet and helping us connect to highly dense populations as well as very remote populations spread out around the world, where it would have been really difficult to build out kind of traditional connectivity. So space is really helping to connect the world, make it accessible for many people, and we're able to utilize space in ways that we never were able to before. And it's these technological changes are happening at a breathtaking speed as well.
Wow. And just to get back a little bit, because you were bringing in the whole Ukraine situation and talking a little bit about the militarization. Could you just kind of talk a little bit more about that relationship to some of these, I guess, military and defense? I mean, there's obviously, when you were talking about the launch capabilities and the satellite capabilities, are there other aspects of that militarization that are coming into play with space?
Yeah, and you can just look at it from the 2023 fiscal year budget requests that the Space Force is requesting. NASA is also expecting to get a record-setting budget for next year as well. So the government has made a decision that space is for real, and we need to spend in order to be competitive in this domain. And so what we saw from Russia late last year was they demonstrated their ability to use an ASAT, an anti-satellite weapon, to knock out a satellite. Not only is that scary, because that means that they could probably take out other satellites if they choose, but the debris field that blowing up a satellite creates and how that affects and creates hazards to other spacecraft and space assets that you have in space. The International Space Station had to do emergency maneuvers in order to avoid that debris field. Wow. So, it's a major problem. If you have more debris, that creates more potential collisions. You have very small to very large pieces traveling at orbital speeds that makes contact with another spacecraft or satellite or anything that you have out there that could impair it or destroy it, which creates a bigger debris field. So in order to keep low Earth orbit safe, you have to detect these objects. You have to detect potential missiles. Laser technology is being developed as well to potentially combat projectiles. But then you have all these other areas of surveillance, real-time tracking of what's the next big threat is hypersonics. So hypersonic weaponry and technology is something that we're very concerned over here stateside, that both Russia and China have leapfrogged our capabilities.
So Andrew, let me interrupt you there. So describe hypersonic. What is a hypersonic weapon?
Yeah, it's a weapon that travels extremely fast, so multiple times the speed of sound. So not only can these objects travel far, but they could travel far very quickly. So your ability to have some type of defensive mechanism to protect yourself from these, the faster something goes, the less time you have to react. Right. And it's believed that one of the best ways to detect these threats is from satellites and satellite networks communicating with each other, and then to be able to potentially deflect or destroy these projectiles before they damage your infrastructure or assets or whatever, on land, in the sea, or elsewhere. Time is a valuable resource, and satellites operating with real-time analytics and AI could help not only detect them, but also track them as they travel. And hopefully we'll be able to build the systems that can combat them once they are detected.
Wow. Yeah. Well, so this kind of lays out the broad themes that are going on in this field, and absolutely fascinating. So when we come back, we're going to talk a little bit more about some of the specific companies that are involved with these. So stay tuned. We'll be right back. Peter Skoufis, founder of Skoufis Capital, has successfully managed money using Bill O'Neill's strategy for the last 17 years. Peter's missed major market crashes, such as the financial crisis of 2008, and most recently, the coronavirus crash of 2020. One of his strengths is finding new leadership in new market uptrends. If you would like to talk to Peter and get his thoughts on the current market and what to do now, or get a complimentary review of your portfolio, feel free to contact him at skoufiscapital.com. That's SKOUFIS Capital, CAPITAL.com. And fill out the contact form or by calling 866-562-2634. Protect your capital and don't miss the next market uptrend. And welcome back to the Investing with IBD podcast, sponsored by Skoufis. It's Justin Nielsen here, along with my partner in crime, Arusha Pires from O'Neill Global Advisors, one of the portfolio managers there. And we're also welcoming back to the show Andrew Chanin from ProcureAM. Really fascinating discussion here on space. And so you've kind of covered a little bit of the broad themes here, and satellites seem like that was certainly a big one. So maybe you mentioned Maxar. Maybe you could go a little bit more into this company. The ticker symbol is MAXR, and what it's getting the benefit of space from, how it's really benefiting there.
Yeah, so it's interestingly positioned as a manufacturer, developer, and operator of satellites. They kind of play several roles within the satellite ecosystem. But what we've been seeing lately is that there has been this new land grab for low Earth orbit, realizing that although it seems like it's this massive amount of space, there really is only, there's so many satellites that you can send up before it becomes overcrowded. And we talked about how debris can become an issue. There's a race to produce satellites and get them up there now, almost like being grandfathered in before a rule changes. And we just saw last month the major announcement by Amazon's Kuiper project, how they just locked up the biggest commercial launch deal of all time. In order to do so, they had to contract with 3 different launch providers because they want to send constellations of satellites in the thousands of satellites. right now there's 3,500 plus satellites operating in low Earth orbit. I mean, we're talking about adding possibly tens of thousands of satellites to low Earth orbit over just the next 10 plus years.
So it's a wild west, essentially right now, because I mean, whoever just gets there, because no one really there isn't a federation or some kind of alliance to.
It's like just staking your claim. If you're there, you're there, right?
Yeah.
There's treaties, and the FAA looks at a lot of stuff here in the U.S. and communications related regulators look at different things as well. But really, the rules are what they are right now until they change, and it's going to be really difficult telling a company that sent up 1,000 satellites, hey, you have to take them down. Yes, satellites have a certain lifespan, and then typically the goal is to safely deorbit them. But once they're up there, these companies want to see them live out their full lifespan, and so being able to get things up there before your competitors do means that you're going to have to really develop these satellites and manufacture them quickly as well. So a company like Maxar has really been around for a long time and has been a leader in this area. So people looking to send satellites up and realizing that there's potentially a window that could be closing. They're really interestingly positioned. And we talked about adversaries being able to take out satellites, whether they blind them and make them temporarily useless, or if they actually blow them up and make them inoperable. It's something where one of the best defenses is having diversification, right? Yeah. So something that we talk about
redundancies.
Exactly. So having probably more satellites than you need, just in case something bad happens, is going to make people want to have much more robust networks. So the idea of having more satellites than you need up there, seems like it could be something that would benefit a manufacturer of satellites.
And out of curiosity, I'm not sure if you know this, but what is like the lifetime of a satellite generally?
Some of them might only be 10 years. It depends. Technologies change. Depends on what their orbit is. It depends on what they're actually doing out there. Sometimes just the technology might become semi-obsolete once it's out there. So it really depends on a satellite to satellite basis. But ideally, they'd last over a decade.
What about like all the supply chain issues that we've been seeing? Has that slowed down Maxar from getting some of these satellites and or any of these companies getting their satellites up? Because there is a rush, but if you can't get the semiconductors to go into the satellites, you still have to wait.
Yeah, what we've noticed over time is deadlines are something that are very tough to stick with space. Not only do you potentially have supply chain issues, especially if something's coming out of Russia that you were relying on, or out of Ukraine, who also does make some pretty important parts for space.
Yep.
When you have those, that can be an issue. Some companies have had harder times dealing with it than others. But even launching things to space, the weather could be bad one day, or it could be windy one day, and you have to delay the launch. And that next window might not be till weeks later. So it's something that's expected. You might have a deadline, but if it's life or death by reaching it to that deadline, don't hold your breath, because things take longer in many cases, and we've seen it in the space tourism business as well, with deadlines being pushed out. So it's something that people should consider, that there's certainly a risk of delays, whether it's from supply chains or even the weather itself, or COVID. Different things happen, and it affects different companies in a different way.
Well, and since you mentioned that I guess restrictions sometimes that can happen with launches, weather or technology breakdowns or what have you. Maybe you could talk a little bit more about the companies that are involved on that launch side of things. So, Maxar's there for the satellites and what you're actually sending up there, but what about that launch side? What companies would you say kind of derive a lot of their revenue from that?
Yeah, so people are familiar with the names like SpaceX and Blue Origin because, hey, Elon Musk and Jeff Bezos, right? So they've got some pretty good PR teams, and they're working to do a bunch on that front. But as far as names in UFO, starting from some big companies, you actually have Boeing and Lockheed Martin created a joint venture called the United Launch Alliance. So that's been a pretty big launch company for years. When you're talking about something like military satellites or things like that, you want to work with trusted partners. They already have a lot of relationships in place with some big industrial companies like a Lockheed and a Boeing. It gives some comfort to clients. We also have in Italy, who provides a lot of launches for European governments or commercial entities. You have Avio, which is a company that works out of Italy, providing launch services. And then we actually have in the fund 2 recently de-SPACed launch companies in Rocket Lab and Spire. And they each have different approaches, are trying to target different parts of the market. But when you look at countries and companies no longer willing to rely on Russian launch services out of the Baikonur launch pad in Kazakhstan, it opens up this huge demand for non-Russian launch providers. And so there are only so many launch companies out there. They only have so many rockets. They only have the availability of sending so many rockets up under a certain amount of time. Astra, one of those de-SPACed launch companies, has said that they could produce about 1 per month. So, they'll have a bigger, more robust, pipeline of potential rockets that they could launch as time goes on. But they're not saying that you just say, okay, let's create another one and it's ready tomorrow. So to the extent that A, companies are trying to send a lot more satellites up, B, companies are having to rethink who they're going to use as a launch provider, and they're now ruling out certain launch providers because of where they're located. And see that the need to have these robust solutions as backups and fail safes, satellites with new technologies as well to detect and track different things, and for Earth observation and climate change and whatnot. There's a lot of demand out there, and only so many companies that can provide it. So these companies are really interestingly positioned for various types of clients to be able to fulfill that demand and supply that capacity for them. So,
I'm also assuming that there's only so many locations that these companies can be based, right? Because like in the U.S., it's like Florida or
Cape
Houston,
Canaveral.
right?
Right.
Yeah, exactly. Yeah. So I'm assuming that that's probably one of the key things for these companies too.
No, you're absolutely right. The ability to get access to various launch pads, get government clearances to operate and to do space from these locations. You're absolutely right. It's not every place is a desirable location for it. I mean, you do have launches from Alaska, but it's certain places, certain times a year, watching for weather and other types of conditions. Not every place is suitable, and getting the ability to have access to those sites is something that these companies will be competing in the future over as well.
And there's also, I mean, as we saw with SpaceX, there's kind of almost that need to prove yourself first, right? Where they had to kind of go through some certain steps. Okay, before you're going to be used and approved, you have to kind of show us your stuff, right? To a certain degree.
Yeah, it helps. And, having existing, contracts and ones that you were successful with, not just getting the contracts, but being able to deliver on them, it definitely goes a long way. And, there has been, a lot of volatility across many different sectors and industries recently. The government and the military wants to know that you have staying power. It's not just important, where you're located or who owns your company, but that you're going to be around to be able to deliver on that project. Not just that you can actually accomplish it, but that you're financially sound enough. So that's something that could position some of the better financially managed companies to potentially secure some of those contracts in the future as well.
And to that end, like Lockheed Martin and Boeing that you mentioned, and their kind of partnership there, certainly well-established names. Where do they fall in that 80-20 that you talked about at the beginning of the show, where the majority of their revenue, are they in that 20% where it's considered like you're not getting most of your revenue from space?
But you're still getting a significant revenue from space. So we're talking over $500 million in revenues annually, or over 20% of their revenues, depending on the company. So to call them a pure play space company, wouldn't be accurate. But they are major drivers of the space economy. So it seems as if it makes sense that they have some representation, but being completely overweight in something that is far from a pure play would maybe deviate from that theme a bit.
And this might be a basic question, but why are we now seeing so much attention in space?
Yeah, I think the media does get excited about it, and it's something that's, I think people get excited hearing
I feel
about.
like it's been 40 years because,
Yeah.
like, when in the 80s, I was really excited about it. I'm sure Justin too, when the space shuttle's there, right? And they're broadcasting that. I think probably on just national television, those early launches and stuff like that. But then it just kind of died out. Why now?
So you may be, we're hearing it a little over 2 years ago or so when NASA came out saying space is open for business.
Oh, okay.
But why is space open for business? It's because NASA and other agencies are now saying, you know what, we don't need to build everything from scratch. You know what, we have our missions and our goals. If you can help us accomplish that, we're happy to contract that out. We don't need to own and operate and build everything. We're willing to work with companies that can help us achieve those goals. And in many cases, it ends up being cheaper for them.
Yeah.
And so, NASA, oddly enough, is actually one of like the positive ROI investments for a government or a government agency. I've seen stats that for every dollar spent by NASA, there's actually been an $8 return in one way or another, which is almost unheard of. When
especially for a government agency.
Yeah, exactly. But another thing that's helping us achieve these goals is technological changes like reusable rockets. Why is that important? Previously, it would be like the equivalent of flying in a plane from JFK to Heathrow and then blowing the plane up when you're done.
Yes.
If you can reuse that plane, you save a lot of time, you save a lot of money, there's a lot of efficiencies. That's what reusable rockets are essentially helping us do. And that's helping to significantly decrease launch costs. So if it costs you a fraction of the price for each kilogram that you want to send into space, that lowers the barrier to entry. It allows more companies to explore what they can do with space. And that is a huge win for the clients looking to operate in space. And this is something that analysts are saying years into the future, they think that this price could keep on coming down as technological advancements increase. And so if it ends up costing $1 per kilogram to send something to space, imagine how many people that can make sense for to get involved in space. So that was a major hindrance, and now it's becoming a huge opportunity, and that's the real reason space is open for business.
And can you put a number kind of on that fraction? I know I heard at one point, like with the Falcon 9 of SpaceX, it was reducing it by like a tenth of the cost. Do you have any numbers in regards to how much that's changed the environment?
I don't want to try to give exact numbers, but that around a tenth of previous costs absolutely sounds right. And they're talking about that coming down possibly to $100 a kilogram or so in the future if everything goes right. And that's a complete game changer. I mean, we're talking about completely different economics going forward. But stuff like that happens when you have reusable rockets, when you have more companies competing in this area. As fuel efficiencies change and become more improved. So there's a lot of things that can happen to help us drive those costs down, and we're seeing it in real time. And say what you will about Elon Musk having a space company, he's been one of the biggest drivers in getting that cost down. And the U.S., the military, the government are direct beneficiaries of that. So I think we owe SpaceX a lot of positive credit for what they're doing to help open up the space economy for America and beyond.
Well, and to that end, you were telling us, before the show, about how seriously governments were taking a lot of this space thing. And so, can you tell us a little bit about some of the recent development, what recently happened with Congress and space?
Sure. So just yesterday, there was the first congressional hearing on UAPs. Which is the modern day term for UFOs that your audience might be familiar with, in over 50 years.
And what does UAP stand for?
Unidentified aerial phenomenon.
Sounds much fancier than unidentified flying object, right?
A little more buttoned up.
Okay.
but really, this came out of a report that came out about a year ago as well, from various intelligence groups within the U.S. And basically, there was a lot that was redacted, but the one thing that was glaring was that there are numerous incidences that we cannot understand. We can't quantify it. We saw, we observed things like crafts moving faster and quicker, making turns quicker than anything that we can relate it to that we've created as technology as humans, as well as the lack of propulsion systems. And so these appear to be technologies that we're unfamiliar with, that all we can do is document them, but we can't really understand where they are, how they're doing what they're doing, where they came from. And to admit that, I think, is important, for numerous reasons, but certainly this is being viewed primarily as a potential risk to national security. And it absolutely should be. If there are aircrafts operating above your airspace that you don't know how they got there, what they're doing, why they're there, that's a major security risk.
Well, I mean,
especially if they're
security
superior technology.
Yeah, I mean, it's a security risk, but you can't really do anything about it. I mean,
No,
it's only so much.
But let's look at it potentially from two perspectives. Say this is adversarial, but not from Earth, otherworldly technology. Well, that is something that could have the potential to bring the people of planet Earth together against a common enemy, and do whatever we can to build out our capabilities to defend ourselves. Right. Now, I don't want to believe that that's the case. What about if it's friendly? Well, imagine the type of collaboration or understanding of technologies that that could provide to our own industries and to our own society. If we had the ability to have technology that could help us travel through space faster, or maybe it's things like just supporting life better in inhospitable conditions, like growing food, creating drinkable water, clean air, things like that are basic needs on Earth. Who knows what the potential is for having communications with species that are more intelligent than us. But certainly I would welcome that opportunity, and hopefully that's all it is.
Well, hopefully they're listening to the podcast, so
right.
They'll hear this. But
how far do we send this out?
The flight's probably pretty long, so you need some content, right?
Right.
Well, apparently it's not just space though. Some of these vehicles have gone underwater and things like that, right? They showed footage like that.
Yeah, it's beyond just aerial. Some of these are submersible as well, so they'll be traveling, through the air, and then all of a sudden just drop into the water and just disappear out of sight. And I mean, it's not just the speed, but the rate at which they can change direction is something that's also just mind-boggling. And I mean, these are coming from very credible sources. I mean, the highest respected military agencies that we have here in the United States and even outside the United States. But these are kind of more so the ones that are being reported here within the U.S. that we were hearing about, at least yesterday, with the congressional hearing.
Yeah, I remember seeing it was like some fighter jets that were trying to follow a UFO, and it was just rapidly changing directions so fast that they were like almost cracking up. Yeah. That how could it's like impossible. How can this thing do like this?
Exactly. And we're not even scratching the surface in our understanding of what these are, but certainly, we hope that our, intelligence groups are taking this as seriously as you can, and trying to collaborate with other branches of the military and science and space to figure out what this could be. And hopefully it's all amicable stuff, and we'll be able to figure out what it is. But I think it's always best to prepare for the worst. Hope for the best, prepare for the worst.
Right.
Mm-hmm. Well, Andrew, this is a lot of stuff to think about, and again, I think in a lot of ways where people may not have realized exactly how much of this is happening right now, as you've suggested, not something that's necessarily future. So again, really want to thank you for coming on, Andrew Chanin, CEO of ProcureAM, the ticker symbol for the UFO. UFO is the one that's space ETF that is under his company. So again, thanks for coming on, Andrew.
Thanks for having me. It's a pleasure as always.
Okay. And when we come back on the next segment, we are going to dive a little bit into the market. It's just going to be Arush and I for that segment because it was quite a day today. So stay tuned. We'll be right back. Peter Skoufis, founder of Skoufis Capital, has successfully managed money using Bill O'Neill's strategy for the last 17 years. Peter's missed major market crashes, such as the financial crisis of 2008, and most recently, the coronavirus crash of 2020. One of his strengths is finding new leadership in new market uptrends. If you would like to talk to Peter and get his thoughts on the current market and what to do now, or get a complimentary review of your portfolio, feel free to contact him at scoufiscapital.com. That's SKOUFIS Capital, CAPITAL.com. And fill out the contact form or by calling 866-562-2634. Protect your capital and don't miss the next market uptrend. Okay, welcome back to the Investing with IBD podcast, sponsored by Scoufis. It's Justin Nielsen here, and I have Arusha Peiris from O'Neill Global Advisors joining me. We're going to talk a little bit about the market. We just had a great couple segments with Andrew Chanin from ProcureAM talking about space, but it's time to get back down to earth, just like the markets did today. So let's take a look at the NASDAQ and start there. So yesterday, we were talking about Thursday and Friday of last week. We had a nice reversal on Thursday of last week. Then we had a nice move up, very strong move up, followed by a little move down, but it was inside the previous day. And then fourth day, we got our follow through day, up significantly, up over 2.75% on the NASDAQ composite. Volume was heavier than the day before. It wasn't above average, but Bill, when he was talking with the markets team, he always stressed heavier than the day before. Above average was desirable, but not always happening. There were a few cases where it didn't happen, and he made it very clear that he didn't want to miss any of these. So we always try and make sure we're not missing anything, and we kind of go with that confirmed uptrend. But it looks like that's going to be under pressure now, because we undercut the low of the follow-through day. And as we learned from Eric Kroll's presentation on this podcast just a few weeks ago, once you undercut that follow-through day low, you really have a lot of increased risk of a failure. Once you undercut that low, you're more likely to either undercut the rally day low or just not go anywhere for a while. So Arusha, let me get your take on this. What was your feeling about today's action?
Not a very good way to start that rally, Justin. It's probably the worst start that you could have. This was a brutal day, just kept getting worse. But honestly, it's not that much of a surprise. I think this is just well within character of how these markets have been, especially the last couple of months. I mean, on this NASDAQ, I have the 10-day moving average right here. It can barely get above the 10-day moving average. Yesterday, it got slightly above it, still well below the 21-day. And then today, right back well below the 10-day moving average, undercutting the follow-through day low. And on the S&P 500, we had a follow-through day. We had a distribution day on the S&P 500. So that automatically reduces the chances of a rally too. Chris Gessel did that study and highlighted that long time ago. And so we keep an eye out for that 3-day window if you get that distribution day. And kind of like the markets the last couple of months, it didn't even try. It just today it was just like immediately gapped down and just kept selling. And so I think it's within character, but I also think the bigger thing and one, there isn't kind of just a black or white type of everything all signal here. The follow-through day is just really telling you that the markets might have a chance to rally here. What I found a better indicator is, are there stocks setting up, right? Because in the end, that's what's the most important thing. Are there stocks setting up bases, breaking out of bases, and actually giving you an opportunity to start buying some stocks? And in this case, there weren't a lot of stocks. The big picture highlighted that. If you're looking at enough stocks, you could see that it was very hard to find stuff. Now, there were a number of stocks within the energy sector, but if you're looking outside of the energy sector, there's probably very few.
Well, I was going to say that one of the other areas that seemed like it was holding up very well, again, if you just looked at some of the screens like the relative strength blue dot, one of the areas that was very strong was, food. Food kept on coming up in terms of the ranks, and you had like Tyson Foods, TSN, that that was, looking like a pattern forming. And you had SJM, Smuckers. So a lot of these, what are typically considered food and very defensive areas, because the idea is, well, we still got to eat, right? Well, these just got clobbered today. And it felt like what we saw at the end of April, where you had these areas that were doing well, the steel stocks, the energy stocks. And, right around April 22nd, it just felt like the rug got kind of pulled out from underneath a lot of those. And steel stocks haven't come back. They've been in a big downtrend since then. But now here we have these strong relative strength lines popping up in these very defensive areas. And man, they got clobbered today. Usually this is what's considered safe. They don't move that much. But, you go down the list, Hershey's, HSY, I mean, that got massacred today. It was brutal out there for these stocks. So, I mean, does that tell you anything about, safety?
Yeah, that tells me how bad this market is, right? Because there's not a lot of places to hide. The REITs blew up a couple of weeks ago, and it seems like we're almost in a classic bear market, right? Where, and not just a classic bear market, like a classic, like severe bear market, I guess you could say, right? Where the market's almost taking its time rotating to different sectors and taking those sectors that were hoped to be safety out and then going to the next one. So apparently now it's come to the food area and taken these stocks out. I mean, I didn't see like some of these stocks until now, and it's no mercy here. I mean, when Smuckers and Hershey's sell off like that, you're in a situation in this market where you just hope to have stocks if you have to stay in the market, right? If you're an individual investor like most of us are, you can stay outside of the market and be in cash. But if you have to manage a book where you have to be invested, and so some of the books internally that we do, we are trying out with where we have to stay invested. It's brutal. Like you're just hoping at this point to be in stocks that are just going down a little less than the market. And it is just, if you're an individual investor and you can go to cash, be very happy at that, because that's the place to be. That's what I'm doing in my own individual accounts. And every day, Justin, I'll tell you this, every day, during this bear market, I thank Bill for sharing the system, sharing stop losses, cutting your losses, and charts. Because, if you're reading these charts, we saw the danger. We didn't know how bad it was going to get, but we saw how dangerous this market was getting back at the end of last year. We're like, something's off. It's pushing us out of all these technology stocks. Then it's pushing us out of all these other stocks. And wow, there's a lot of stocks breaking down. Maybe we shouldn't have a lot of exposure in this market.
Yeah. And again, those signs were pretty clear if you were looking at charts. But I have to agree with you. I'm in the same boat. A lot of times on IBD Live, we've been talking about, well, if you have to buy something, here's some things that we're looking at. And again, most of those were the stronger relative strength lines. But we always wanted to make sure that we made the point that for a lot of us, we don't have to buy something. We can just sit in cash. And that's the safest thing. And I should also mention, when there is a follow-through day, it's very important to remember this. And if anyone out there went a little bit too heavy this last time, one of the important lessons that I learned in 2000 and 2003, in those years of a bear market, was I kept on going in too heavy. I mean, like, I was on margin within days because I just wanted to make money again, like I did in the late 90s. That was all I knew, was that you could just make money hand over fist. And I wanted to get back to that so desperately that I was going in heavy each and every follow-through day, until I figured out, oh, that's not what Bill does. He goes in and he says, hey, let the market prove itself to me by my stuff working. It's very simple. If your stuff doesn't work, don't put more money in.
and start taking money out, right?
And start taking money out. Yeah,
Yeah,
absolutely.
just get stopped out, listen to the
You
markets,
get
have a
stopped
look.
out, right?
Yeah.
Yeah, it's
Um,
just that simple.
I mean, the one thing I always say, and the one thing I always tell myself is, especially when you're in a correction or in a bear market and you get a fall through day, let the market slowly pull you in, just like
Yeah.
you were saying, right? And you don't have to do it all in one day. A lot of times, even 2000 in 2020, when we had that fall through day in April 6th, I didn't really believe it, but I bought
Oh,
something
yeah.
on that day. And maybe after 2 or 3 weeks, I was like maybe 50, 60% in. And then by a month, now I'm like 100% in. It took that long, to really let the market, for me at least, slowly pull me in, because I was still a little nervous and it didn't seem right. But then the market just, kept pulling me in and wasn't pushing me out from the stocks I was currently owning. And so there is that kind of process. Scott O'Neill always described it that there are plenty of markets where it takes time. That first month, it takes time. So imagine like a 747 taking off, where initially that 747, it's like, is it gonna ever get off the ground? It's just like kind of just hovering there, and it takes a while for it to slowly get off the ground. Then finally it gets off the ground and starts inclining.
Well, maybe we could just look at an example of this. In 2003, we had this great rally, right? Finally, the bear market was over. So maybe if you just go a few months after the March 2003 follow through day, just to kind of show you an example. Now, this is one that worked. Okay, this is one that worked. But you see, you had that follow through day on March 17th, and then you had a couple weeks of sideways action. It was like it didn't go straight up. You had kind of that sideways action for a little bit, and that's fairly typical. So again, to the point, you kind of have a chance sometimes. It's not about being first. It's not about being early. It's about, hey, you throw a probe out there, and if it doesn't work, then you just put your toe back in, and say, this is too cold, I'm not getting in. It's that simple. And I think we got a very clear signal today. Hey, if you dipped your toe in the water, there's piranhas in that water. It's maybe time to get that toe out before you lose a limb.
Yeah, it's about making money. It's not about being first, like you said. It's not about being right. It's just about making money and slowly put your money, hard-earned money, back to work as you prove to yourself that you're making money in the market. Now, with this 2003, I clearly remember this one because it's the first kind of real bull market that I saw after studying the system. I just clearly remember Amazon was breaking out very powerfully on this time, right? So on this 2003 is a great market to study because you had this powerful follow through day, but you had merchandise to buy.
Yeah.
So Amazon right on that day I think that was March 17th right there. It was breaking out of this consolidation there. You had a newer, younger company, Netflix, emerging out of this kind of cup pattern.
We can't pull it up now. Yahoo.
Yeah, exactly. Yahoo was kind of emerging out of an ascending base on that day. NetEase was a new, young Chinese gaming company. Let's see how that one looks. Coming out, out of this double bottom. So you saw all of these. That was a few weeks later, but you saw all of these companies starting to emerge. So if you see every few days another great stock, a growth stock, right, especially a growth stock breaking out, that should be the signal. Now, if you want to play in the energy stocks and those are doing well and those essentially are in their own bull market here, then stick to those. That's totally fine. That's like kind of the one sector that's working. But really, the real new bull markets for the indexes, they're broad based, and a lot of times they're led by growth stocks and technology related stocks.
And you get a whole different picture when you've got growth stocks that are the ones with the high relative strength lines as opposed to your food stocks. It's just a very, very different market when that, or your utility stocks or your REITs and so on. Your high dividend payers. That's the kind of market that we look for. And just to kind of remind people that again, if the market is going to turn and if it's going to get stronger, you're going to see more and more signals. The way that we do things in market school is, the follow through day is one signal, and you start doing it a little bit, but you then want to see, can you get above the 21-day line? Can you get above the 50-day line? Can you be trending above those lines? Can you get subsequent follow-through days? Another thing that we talked about with Eric Kroll. So that's something that we have in market school. Those follow-through days that happen after the initial follow-through day that kind of tell you, yes, this is something that has power and can keep going. And all along that way, you'll have breakouts happening, almost on a regular basis, to the point where you start saying, oh man, look at this stock that I missed. Look at this stock that I missed. And that's how you know you're in a better market.
Yeah, so I just pulled up in MarketSmith and I looked at the near pivot list. There are only 8 stocks right now that are part of the Growth 250 that are forming bases.
Mhm.
And so that in itself is going to tell you how many stocks are ready to go and what the probabilities of a rally working are just by looking underneath the surface. Now, when you look at a lot of these stocks, these more growth related stocks, the reality is they still haven't started to really try to build a bottom. They're building the left-hand sides of
Yes.
something right now, right? So
Yeah.
when you see that, a lot of times it's like, maybe we have like at least 2 months or so, 2 to 3 months for these stocks to start going sideways and actually build some potential, maybe ugly kind of bases.
Yeah. I mean, this could be the bottom. Sure. We haven't undercut the rally day low yet. But it doesn't necessarily mean we're going to go up right away. We could get a lot of sideways action, or like we saw in 2003, that was a 3 waves down, a very classic 3 waves down before the market actually turned. So we might be looking at another leg down. So stay tuned. We will
And one
be
last
covering.
thing, Justin.
Oh, yeah.
One last thing, Justin. Because I think you reminded me there. Keep an open mind, right? It looks awful right now.
Mhm.
Everyone I talk to, including myself, we're all very negative on
Mhm.
the market. But you always have to kind of keep that open mind. You did have a follow through day. We are under pressure, but you just keep that open mind because these markets will always turn around when things look the worst.
Absolutely. Good advice. And again, maybe even take another look at Jim Ropel's podcast from last week, because as negative as he could be on the market at any given point, he's always optimistic about the future. So that's going to do it for us this week. Next week, you're going to get more Arusha and Justin time. It's going to just be us. We're going to chat a little bit more about the markets, and we'll come up with some learning lessons, and hope you join us for that. Thanks for joining us this time. We'll see you next time. Make sure to subscribe, rate, and review our podcast if you haven't already. We'd really appreciate it. You can also send us your questions and comments to investingpodcast@investors.com. We would love to hear from you and may use your comments on an upcoming episode.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.